Welcome to Financial Issues, where we help you steward faithfully by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
This is Financial Issues, where we help you defund darkness and fund the light by investing with biblical integrity. Great to be here with you all on this Focus Friday. Gentlemen, Seth Udinsky, Samuel Case, and ladies out there, of course. Ladies and gentlemen, welcome. And, of course, your host, Mark Manila. Mark, good morning to you, brother. It's great to be here.
Good morning, Seth. Good morning, Sam. Good to be here today.
It's going to be a fun one, guys.
Yeah, Focus Friday, which means we're focusing on your calls. So 610-363-1110. Get in the queue right away. We're going to take calls. They are the priority today.
They sure are. So get them in right now, folks. Phone lines are open. Light them up right now if you got a question. On today's show, of course, your calls. You got questions. Mark has the answers. So give us a call right now. Again, 610-363-1110. But before all that, Mark, let's start off here. This week, there's been a recurring topic that we've been looking at. Several people have been asking about the controversy with Timothy mutual funds, particularly the Israel Fund, and being able to purchase them on certain platforms like Schwab. Can you, Mark, give us an update? What is going on here, according to your research?
Yeah, what's going through my mind is, if we were just social media and just trying to get clicks, we'd have a headline like anti-Christian or just bad service or something like that, But so far the research, we've had some people contacting Schwab, some people contacting Fidelity. It seems like both of these platforms just have some rules on mutual funds that don't go along with what most people are used to seeing. On Schwab, I did the calls on those, and I'm unhappy with the answers because they couldn't answer why. They said you can buy Timothy Plan, Israeli Common Values Fund on it. It's just that certain shares aren't offered, and those that are, they're with a $50 fee, which I said, why a $50 fee when I could buy other Timothy Plan mutual funds without a fee? And he said, I don't know. I said, can you find out? He says, I don't know if I can find out. It's like, well, is there somebody I can talk to who can find out? Well, I don't know. That's the answers I was getting. So unfortunately, I'm very uncomfortable with those answers. I think at Fidelity, Sam was doing the research there and found that it is available. Isn't that true, Sam?
From what I can tell with Fidelity, they are available. However, you have to pay a $2,500 minimum purchase. That's not just true with the Timothy funds, though. That's true with all of the funds. I tested it out with Vanguard as well. They also had the $2,500 minimum. So there's no discrimination there, but it is a little awkward to say the least.
I think it's also important to note that's not for Timothy ETFs. Timothy ETFs you can buy.
Yeah, just mutual funds.
This is just
ETFs
funds,
are traded over the counter. So, they're traded on the market, so they don't go through the same thing. I find it really interesting. I'm so used to having an environment of investment advisory service, which is different than a brokerage service. In investment advisory, you don't pay commissions, the person, your advisor, doesn't get commissions. The platform usually doesn't charge commissions or fees for the trades of these things. They're earned with a fee, which is for the assets under management. So you could buy 1 share or 1,000 shares of anything, and there's no fee involved. So this is outside that. So I'm finding that the platforms are getting a little bit harsh, making it harder, because usually mutual funds. Here's something that I do know for certain. You can buy the Timothy Plan Israeli Common Values Fund directly at Timothy Plan. At Schwab, I asked them, so what if I didn't buy it on your platform, but bought on a different platform where they don't charge me $50 to buy it as a fee and then transferred it in? Is there a fee for transferring in? Well, not from us. That'd be fine. You can do that, which makes no sense whatsoever.
That's just bad. So, and not the dogpile on Schwab, but that's just bad customer service. It feels like, Marcus. Bad service. Having
to buy $2,500 of any mutual fund to me is bad customer service. You have an UGMA with $2,000 in it. You can't invest in a mutual fund.
It's ridiculous.
I mean, that doesn't make sense to me.
This is why I call Mark the Socrates of finances behind the scenes, because he just asks why all the time. And it drives people nuts. You can't buy that. Why?
That's awesome.
I don't know. Well, why don't you know?
That's awesome.
Well, why did you say that, Sam? No.
There he goes. Yeah.
So, Mark, an overarching question, I think, for all of us, and maybe our listeners are wondering this, knowing all of this stuff, if we're on a platform like a Schwab or even like a Fidelity that puts these hiccups in the way, these obstacles of wanting to be biblically responsible, how much consideration should we take into changing platforms?
Well, that was that false headline, is it anti-Christian or just bad customer service?
Right.
That I threw out there. I threw that out because I don't believe this is anti-Christian. I believe that there are certain families of funds and things that maybe they don't read. There's some background. I haven't been in the industry 35, 40 years. I know there's some background to this. The platforms they're in the business to make money. Mutual fund families pay them to offer their mutual funds on their platforms. If you don't pay them, then they're going to make it another way. So they'll charge a $50 fund or fee, or they'll have a limit on it. Even Fidelity has their preferred mutual funds that you don't have to pay a fee for. So, and those preferred funds are the mutual fund families that are willing to pay them tens of thousands and maybe even hundreds of thousands. I don't know what the fees are from the fund families to the platforms. So there's a lot of stuff in the background we don't understand on how they make money and all that kind of stuff. We look at a broker dealer like we look at a bank. We just expect them to be serving us and not realizing that they're not there for us. They're there for them.
Might not be anti-Christian, but I see a lot of people in the chat suggesting, is it anti-Israel? Because it's only affecting the Israel fund. Is this part of that boycott, divest, sanction movement? What do you think, Mark?
Yeah, I don't know if it's only if it is only affecting the Israeli fund. Then the one thing I'll say for certain, we haven't gotten to the bottom of it yet. This is just an update. We wanted you to know we are looking into it. I do have calls into other areas looking for reasons and to get to the bottom of it all. So if it is just the Israeli Common Fund, then there's some issues there that we have to find out. But as far as we know, it could be there was some limitations set recently by something else that we don't even know about. Like I don't know. We're digging in. I got calls into the Timothy plan. I got calls in different places to find out. We're gonna get to the bottom of it.
Yep.
You and I are gonna get there.
That's good. Mark, appreciate that so much. 610-363-1110, folks. That's the number to call in. Hey, guys, quickly here, let's get to a quick story before we devote the rest of the show to questions. Looks like Scott Bessent is leading the charge in doing, I think, some necessary overhauls. Sam, what do we have going on there?
My man Scott Bessent is now proposing a shift to the mission of the Financial Stability Oversight Council, which was created after the 2008 crisis to tighten up those financial regulations. But now he's calling for really what is a reversal of their mandate, calling for a shift towards easing regulations instead. In a letter to the council, of which he chairs, he said, quote, "The council will now work with and support member agencies in considering whether aspects of the U.S. financial regulatory framework impose undue burdens and negatively impact economic growth, thereby undermining financial stability." By the way, Bessent's been pounding the table on overregulation for some time now. Earlier this year, he called for a, quote, "fundamental reset of financial regulations," which he say has suffocated the financial industry, specifically banks and those more community banks in particular.
So, Mark, it feels to me like a step towards making the free market, well, free.
Free. What a concept.
Right?
Huh?
I'm a brilliant guy,
get it.
actually. Yeah,
I get it. And I think most of us here and our listeners and partners are free market oriented and whatnot. And I like the idea that Bessent is shifting his mission from tightening regulations towards freer markets. I think his idea is that heavy regulation can undermine stability by suffocating growth, and we've seen that in other industries and whatnot. And but I got to tell you, there's something that just bothers me about this. And give me a second. We only got a minute and 23, but think about going to a circus. When you go to a circus and they bring out the birds in the Bird Act, they just put out a stand, put birds on them, and everybody's happy with that. But when they bring out the lions, they have this big 2-inch metal pipe cage they put them in, and they bring them out and they move them through cage corrals into the, so they put all these restrictions on the animals. Well, why? Because a parakeet isn't going to eat you, but a lion will.
I've met some mean parakeets, though. I don't know.
But just like circus animals, the more injurious the impact of institutions, bad decisions are, the more regulation, I believe, is required. I think banks are like predator animals, and we got to be very careful. Power leads to corruption, absolute power, absolute corruption. We need to cage them in somewhat, but not at the expense of the little banks. So I just think it's very important that we don't do away with all regulation, because 1929, 2008, we saw what happens when we let banks get greedy and stupid.
Read carefully before investing.
Are you tired of the chaos? There are a lot of things that make noise, but only a few that truly matter. As a parent, I want to leave something that will last for a long time.
You invest $300 a month increase on unmanaged by the time you retire.
Not just an inheritance of money, but a legacy of godly values.
Here at Financial Issues, we want to help you grow your money, but our main goal is to help you honor God with the money that He's given you.
Invest your money in a God-honoring way. Go to financialissues.org.
If a woman sees her baby on ultrasound, it doubles the likelihood that she'll choose life. And on top of that, we share the gospel of Jesus Christ with her. This is why you should support preborn. The donations that you give actually make a difference. Last year, 59,000 babies were saved because of what you have done with your generosity.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
610-363-1110. Hey, listen, folks, I want to tell you about a very cool Christmas gift right now that you can give to a loved one. So, of course, you can gift a partnership for Christmas. If you do that this year, you will get a certificate that looks just like this. Mark, our radio audience, I feel so bad because if you're watching or if you're listening on the radio, you're missing out. I'm showing what the there it is on the screen right there. You get that
sharp looking.
Cool little gift to partnerships certificate. You can put that under the tree or in a stocking. Be a great, great gift for a loved one, for a young person, if you want to teach them how to be biblically responsible. Mark, I really think it's a great way to steward the next generation. This is a stewardship issue. So consider gifting a partnership today, folks. You can do that at financialissues.org. Be a great thing to do. 610-363-1110 is the number to call in. And Mark, we've got a call on the queue. Let's get to Deanna.
Let's go ahead and go to the call. Hi, Deanne. Dina? Is it Dina or Deanne?
Dina.
Dina, good morning. Welcome to Financial Issues. What's on your mind this morning?
Hey, good morning. First, I just want to say thank you for what you do. I've been a long-time listener and a giver and the dashboard, and I have to admit that it's been a very big learning experience for me like other people. I have a question, though. I heard someone say something recently that I was unaware of, and I must have just missed it when I set up my IRAs. I have my IRA set right now to beneficiary to my kids who are young adults when I pass, and my trust to pay my spouse's bills if he would live longer than me, which is probably going to happen. But I heard someone say that you can make your IRAs beneficiaries in your trust so that it makes payments as opposed to your kids just getting a chunk of dough all at once. Maybe I'm not understanding that correctly.
Well, you can do all sorts of things with trust. There's something in the back of my mind, though, about leaving an IRA to the trust, some tax implications to that. They are tax sensitive. IRAs are not like cash or brokerage account. You know, every dollar withdrawn from an IRA is generally taxable income to someone. And or how that's determined. I'm trying to think through this, Dina, as we're talking. Trust can hit the top. I don't know how big your IRA is, and that's all right. You don't have to say it, but trusts usually hit their tax bracket very quickly, which means there could be some tax implications. I'll have to go look it up again. It's been a long time since I've had somebody want to leave their IRAs to the trust.
Okay.
You know, I think that the only times that I really recommended it were in special needs cases, you know, children with special needs or things like that. You know, in that case, it's worth intentionally sacrificing any tax efficiencies that you could have by leaving them to your children or your spouse. So I would look into the tax implications of that. In general, it's better to leave your IRAs directly to individuals and from a tax perspective. But is there some reason why you just wanted to go to the trust? What was the benefit of that for you?
Yeah, I don't know. I just heard someone say something about the other day, and I just wondered if going there where the trust would say, like, you know, here's a payout of, I don't know, $2,000 a month per child and spouse, so that they didn't take a huge impact of the IRAs. But with my kids as beneficiaries, I assume they can just keep the IRA and take the money out as they want. So it's going to be taxable any way it goes.
Well, unless it's a spouse or a special situation, there is the 10-year rule, Seth, that they have to withdraw the money from it within 10 years, which means you could take it all on the last day of the 10-year, or they could take it a little bit each year for 10 years so that it spreads it out as well. Does that help?
Yeah, it does. And I know you've talked about this before, is trying to start drawing down on regular IRAs and go to the Roth so that it's already taxed, so that they don't have that really big tax implication. And that's something I'm looking for to starting to do. I'm going to do some this year. I was thinking, like,
well, praise God.
I feel like you said at one point $20,000 a year, but I don't know. But I know it's going to be based off what my taxes are. So I'm talking to my tax accountant Monday to see how much I could take this year without it totally destroying my taxes, so that I can start doing that for my kids, because
you want to try and keep. Yeah, you want to try and keep it in the tax bracket you're in. You know, you don't want to take so much out, you're going into another tax bracket and paying extra on the amount that takes you into that bracket. So if you can, and this is a perfect time. It sounds like you timed it real good. People are getting together with their tax advisors this time of year anyway, so you can talk about when is this a good time for me to convert some or all of my IRA to a Roth, so that I don't have to pay taxes on it ever again. I think that's a great idea.
Yeah. Okay, excellent. Thank you for your help. I really appreciate it.
Well, thank you. God bless.
Great call, Dina. Appreciate you. God bless you. 610-363-1110. Mark, I appreciate that. Hey, Mark, real quick, I did want to mention this also. Several folks have mentioned on the chat that they're still seeing some issues with their portfolio tracker. Wanted to let you all know we are working on these as we speak. That's a top priority for us right now. But if you're seeing positions that show a $0 value, for example, you didn't do anything wrong. That's a back-end issue that our website developers are working on right now. So don't fret. We're going to get that issue cleaned up as quickly as possible. Just wanted to make sure that folks knew that. 610-363-1110. Hey, Mark, let's get to a question here. I think this is a good one. Chad, who's 43, is asking, hey, Mark, I have a non-matching, non-BRI Voya 457 plan through my employer. There's a self-directed option which allows me to be BRI, but 25% of the total must remain in Voya. Would the Voya bond fund option be biblically responsible? I'd like your opinion on whether it's too much of a compromise to allow 25% to remain in something like an S&P 500 index fund. I plan to retire in about 7 to 12 years, and I'm already maxing out my Roth. How would you help Chad there, Mark?
Chad, I'm taking a breath here because sometimes I've been told I'm a little aggressive when it comes to biblical responsible investing. So, Chad, I'd say any compromise as a believer is a big compromise. If we're willing to just say, well, this is just a little bit of poop in our portfolio, how much is a little bit, and when is it too much? When does it just stink too much? When does it interrupt our relationship with our Savior? How much is our trust in God? Are we trusting in what the world can do through us, to us, or for us with their instruments? Or do we trust God to know that this situation where they put you in a position where you can't invest without compromising your beliefs and your trust in Jesus Christ, God knew it was going to happen, is what I'm saying. He knew this moment was going to come, and he's saying, Chad, this is a choice you get to make. Do you trust me more than the institutions of this world? That's what I believe it's coming down to. And every time we trust God, he has a better alternative. Even if we don't feel it or see it or understand it, somewhere later in life or when we meet him face to face, we're going to go, oh, I get it now. You gave me this opportunity to learn to trust you more. And in doing so, so many wonderful and beautiful and righteous things flourished in my life that I didn't even connect to that one decision. So from the bottom line, and please forgive me, Chad, if this is a little harsh, I'd say we don't compromise with alternatives like that. But I would give a little advice. Even though the Voya bond funds are not BRI, I would think they'd have something in there that you could put it in, like a money market, as we talked before with others. But is it worth it since there's really no matching? Didn't you say there was no matching? I believe you said.
Yeah, I think so, Mark.
Yeah, why bother with it outside of, I know you if your Roth is already loaded up, what about a spousal IRA? Are you married? Does your wife's IRA, have you loaded that up? Even if she doesn't work because she's married, she can create an IRA and fund it just as abundantly as you could. So why not that? And then even if that's already funded, praise God, it means you're doing well. You're funding both those. And, I know the 457 may have an upper limit. You could just open up a traditional individual investment account. It has tax benefits, long-term capital gains, rates are lower, those kind of things, and you can just start feeding that. So they're all, and in that you can choose investments that just honor God and don't grieve his heart. So effectively you could defund the darkness and fund the light and get everything done there. And I believe what'll happen, this is just how it has impacted me. When I trust God more than I trust any institution in the world, I feel better about life in general. And I feel the joy of the Lord in my heart. I hope that helped you there. And I hope you didn't take it. It doesn't sound too strict or restrictive, but when we follow God's directives, when we follow his plan for our life, when we walk in his ways, I don't know, everything just seems to be better. Even the trials seem to be easier because we're running on his power, his wisdom, his strength. We're running on Jesus fuel at that point, and it just, even the trials work better for us. So you asked me, so I'm going to give you my 2 cents. Bottom line, no compromise, find an alternative. If you can't find an alternative, don't worry about it. Because I will say one other thing, and a wise man once said to me, he said, how much will it take for me to convince you to compromise your relationship with Christ? What size of a bribe will it take to do that? Is it just convenience, or is there a dollar amount that will make you compromise your relationship with Christ and your trust in him? That was kind of harsh coming to me, but he was absolutely right. And then he called me. He said, actually, the words he uses, how much will it take for you to prostitute your faith?
Mm. Harsh sounding, Mark, but it's true.
Yeah.
It really is true.
Yeah, exactly right. Chad, I don't think that's what you were trying to say, by the way. So I believe that your heart is right. God's pulling on it, tugging on it, and say, here, come on, walk with me. Don't worry about that 457. But I would contact them, and if you want, we'll get you out a copy of that letter that you could give to them that honors them, respects them, and allows them to reconsider their options for people of faith like you, somebody who loves the Lord and wants to honor him. If you want that, just email us or call in and we'll get it out to you. And you know what? We're just going to send it to you. Yeah. Obviously, we already have your email.
We've got Chad's email.
We'll just send it to you, Chad.
Mark, I'll make a note to do that. Chad, I'll try to do that during this break for you, brother. It's a great question.
Oh, that's quick delivery.
Absolutely. That's right. Well, good stuff, Mark. Hey, if you have to leave us, folks, we hope you have a wonderful weekend, a great day of worship. But hopefully you don't have to leave us. You can stick around for the remainder of the show. We've got a great rest of the show. Daryl, we'll see you in the call queue, brother. We'll get to you in just a moment. A lot of questions to get to as well. And your calls, folks. Phone lines are wide open. 610-363-1110. We'll be right back after this break.
My wife and I, we moved into this neighborhood. We had some experience with Crossroads Kids Club. We had served at another club. We kind of thought to ourselves, like, it would be really, really cool for us to actually bring in a club that was able to share the love of Jesus with kids directly into the school. And so we started our Crossroads at Hilltop.
Crossroads is amazing. You can learn all kinds of things about God. That he loves all of us. He died on the cross to pay for our sins. That he will help me in every way.
There is just such tremendous opportunity to reach kids in some of these areas that just aren't being reached.
Sometimes I pray every night. When I feel alone sometimes, God is right there sitting next to me. I can rely on him no matter what happens.
Help reach kids with the hope of the gospel. Visit reachOurschools.com.
I started investing close to 30 years ago now. All that time, I had never heard anyone talk about setting up your portfolio in a way that glorifies God. When I first heard about it, I was listening to the radio, a show called Financial Issues. They were teaching people how to honor God with their money. That made a lot of sense to me. I guard my heart, my mind. I watch my mouth, hoping to bring glory to God in everything I do and say. Well, why wouldn't I want to do the same with my money? I decided I wanted my portfolio to glorify God. I became a partner with Financial Issues, and it's been one of the best decisions I've made. I want to leave a legacy of godliness for those who are following in my footsteps. Invest your money in a God-honoring way. Go to financialissues.org.
I found out I was pregnant when I was 21 years old. For me, I was scared, I was shaking. I Googled places to abort. We drive there, and as soon as we get there, I open the door, and the first thing that I see is a bunch of Bible verses in the walls. They gave me a little counseling session, they gave me the pregnancy test again, and they do an ultrasound. And that's when everything changed. When I saw my baby, and when I heard her heartbeat, that was it. We decided with my boyfriend at the time, which is now my husband, to continue the pregnancy together. We started coming to the classes, doing our homework, getting counseling together. We've seen the hand of God ever since we stepped into the pregnancy center.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
You know, guys, I gotta say, when you hear jazzy Christmas music, doesn't it just feel like you're living in the millennial kingdom? I mean, not to get into eschatology here, but this is pretty great. This is pretty
It
great.
made me think of a Hallmark movie, you know.
That's awesome.
The beginning of a Hallmark movie where the executive woman's walking down the street with the snow so nicely parted, and
it's the same story. Just
and she bumps into the carpenter who doesn't make too much money, but he has a heart of gold, and they fall in love.
Love
and
it.
she spills her cocoa, and he cleans it up.
Delightful. Delightful. It's great stuff. 610-363-1110. Folks, give us a call. Mark, we've got a caller in the queue right now. This is Daryl. I believe this is Dr. Daryl from Texas. I could be wrong, though, but great to have Daryl on the program.
Daryl, welcome to the show.
Hey, guys. Hey, y'all. Y'all doing okay?
We're good.
Great show this morning.
Well, praise God. I really appreciate that feedback. What's going on with you?
Well, I was really thinking about that. The jazz actually made me think of Charlie Brown.
Oh, me too, brother. Me too.
One of my favorite Christmas shows. Yes. Yes.
There you go. I think it's like the 60th anniversary this year, so that's kind of cool.
That is cool.
Yeah.
Anyway, so my question's about the preferred that was put on the buy list most recently. I'm more of a growth investor, and I'm kind of tweaking my portfolio altogether. And the energy sector is one of them that I'm kind of focusing on right now, and that would fit. But my question is the common stock just as good, more of as much of a buy as the preferred, or are you putting it on there mainly because of the great dividend that it has?
Yes, and yes, and yes. You know, the NGL, NGL has some great forecasting going on. I think that the earnings are forecasted to do like 150%, per year going forward. And in the past year, in the past year, they were like 30 or 40%. So that's looking good. And as far as, coverage for debt and things like that, it's really interesting to look at that. They are very strong. There's no really big issues with their debt and the coverage for it. The stock's still trading below fair value. I think that it would be a decent stock, really. I don't know. I don't see any issues really at this point. Maybe I need to go back and look at my notes to find out. But I'm going through my brain here because I was just going through preferreds last night, reviewing the preferreds, and this is sticking out on my mind. So right now, I'm thinking that we don't have any issues with them. As a growth stock, I think you could do that. I don't know. Earnings growth rates supposed to be up. So, yeah.
A related question, and it was in the chat yesterday, I think we were talking about it, with the MLPs and these preferreds, the tax burden, the additional tax burden that's on them. If we're holding these in an IRA or other qualified account, does that make a difference, or do we need to worry about those additional tax? I mean, the filing stuff, or does the brokerage deal with that?
Can you restate that? Because I just didn't follow what you were saying.
Okay, so there's an additional tax burden with the MLPs and these preferreds, and if I hold it in my brokerage account, I'm responsible for K1s and all that other stuff. Correct?
Yeah. Yes. Yeah. Well, they'll issue the K1s. You just got to report them on your taxes. The brokerage will issue the K1s. Yeah. Yeah.
Now, if I'm holding it in an IRA or a qualified account, do I need to even worry about that?
The issue, any K1s, I really don't like holding anything in an IRA that has a K1 because the unrelated income tax, that tax that they put in there that you end up having to pay it inside your IRA for some of these. You want to be careful. I like minimize, make sure that they don't have any, UBTI, unrelated business, UBIT, unrelated business income tax. You want to watch out for that. I just, as we were talking, I just pulled up some notes of mine. One of the things I was concerned about was the debt level on that preferred. So we want to be careful about that. Their debt has grown a lot, but they have the cash to cover it, which is really good. So anyway.
Okay, great. You got time for one side question?
Sure.
Okay. There was some mention on a couple of the shows recently about an potential oil glut coming in the energy, which would be bad for energy stocks in general. Are there industries within the energy sector that would benefit from lower oil prices?
Oh, sure. Midstream, pipelines, refineries, those kind of things. We'd see them pop because the cost to them. I mean, there's. With the energy costs low, we would see an uptick in usage. So the pipelines and midstream things, they would all be nonstop. And then the refineries, they'd have less cost to them. And so, that end of it would do good. The exploration gets beat up because I forget what the number is, but, back years and years ago, I remember we calculated that gas had to stay above a certain dollar amount. At that time, I think it was around $50 a barrel or $40 a barrel to make exploration worthwhile.
Right. Okay. Well, you covered it all. Appreciate it.
Well, good. God bless you. And if we don't talk to you before Christmas, Merry Christmas.
Merry Christmas to you guys.
Merry Christmas, Doc. Always great to see you in the chat, brother. Mark, speaking of the chat, we got a good one from Jordan. Jordan's in the chat today, and he's asking this question. Mark, do you consider a bond fund not BRI, even though we are not taking ownership in any of the companies? What about a CD in a bank that is not BRI? Again, we're not taking ownership of the bank.
Well, that's interesting. A CD and a bond fund are very similar. You're lending money to somebody. Now, the Bible talks about debt very clearly. It says that the borrower becomes a slave to the lender. He's emphasizing that you give control over your stewardship to somebody when you borrow money. But the opposite, they say, is that you are blessed by being a lender. You'll be blessed by lending to many nations, is what it says. And I think it's in Deuteronomy. So we see that it's okay to lend. But I would say maybe okay. And the reason I say maybe is not because I'm doubting the Bible, but because it has to fit in with the rest of the Bible. And nowhere in the Bible do I see anywhere that it says we should fund the enemy in any way. Think about this. Imagine you're in a foxhole over in Iraq. This is a story out of my book, The Wall Street Awakening, dealing with the bond connection.
Which, by the way, you can get for any donation, any amount to the ministry, folks, for Christmas.
Yeah. So here's a guy writing home, and he says, "Dear Sally, it's terrible out here. Jim got shot yesterday and died, and my other friend Barney, he's lucky. He's on his way home. He lost his leg, and he gets to go home. But there's good news. The enemy's running out of money to support the war. They dropped these leaflets saying they're paying huge interest. Maybe we should buy some of these bonds so we can prepare for our future if I make it through this war. I mean, nobody would write such a letter. Why would we fund the enemy who's trying to kill us? We wouldn't lend money to those that are offending God so they could offend God more. That's the bottom line on it. So yes, we want to be careful on who we lend money to as much as who we partner with. It has the same principle. We don't want to fund the darkness, bottom line. We want to fund the light. So if there's a bond fund and the funds in there are companies that are involved in abortion, pornography, using and abusing God's children, mutilating children with sex surgeries and promoting sexual immorality and all this ugliness, we don't want to be a partner in that. We don't want to lend them money to do that either. So that's why we say no. Yeah, we screen the bond funds just like we screen the stock funds so that we do not participate nor fund the ugliness that they do. We want all that money going to godly things, wonderful things, righteous things that honor God. We want to manage his money for his purposes in a way that glorifies him, bottom line, and trust that he is the God all-powerful, and trust that he will utilize that in a way so much far greater than if we compromised ourselves and his money in our stewardship.
Mark, I would suspect that some of our listeners probably that wet their whistle for their copy of Wall Street Awakening Give a gift of any amount to the ministry, folks, and this is yours. And let us know if you want multiple copies too. If you want a Christmas gift or anything like that, give as the Lord leads. That's great. Hey, Mark, a quick question here. Dee from Alabama is asking about using the qualified distribution from an IRA. She's 72, husband 65. Wondering, are we able to do this based on my age, and are we limited to giving to one shareable organization? We have several we give to.
Given multiple, of course, you're not limited to one ministry. QCDs may be divided among as many different qualified charities as you choose. What was the first half of that?
Yeah, the first half was just it's concerning the shareable giving used in the qualified distribution of an IRA.
Yeah, well, eligibility isn't based on a counter's age. So, D, your age, but since you are 72, you do qualify for QCDs. From your IRA. And I think it's wonderful. You're not limited to one ministry. You can go on. Using QCDs annually may help reduce taxable income. And I think that's wonderful. When we can do good and do good by doing good, that's good. Bottom line on it.
Like double your triply good. That's great.
Yeah. But we're getting near the end of the year. You're going to have to move fast on that because it has to be completed by the end of the year for it to take effect. Yeah, so thank you for your heart. Thank you for your love for the Lord. And God bless you for the question.
I started investing close to 30 years ago now. All that time, I had never heard anyone talk about setting up your portfolio in a way that glorifies God. When I first heard about it, I was listening to the radio, a show called Financial Issues. They were teaching people how to honor God with their money. I became a partner with Financial Issues, and it's been one of the best decisions I've made. Invest your money in a God-honoring way. Go to financialissues.org.
I remember my life before I met Jesus. I was most of the time afraid. I remember one of my teachers gave the classroom an invitation for Crossroads. When they talked to me about the love of God, I felt a sort of peace in my heart. I will commit myself to learn more about God's Word, to be able to share the gospel to others.
To help reach more kids like Louise with the life-changing hope of the gospel, visit reachOurSchools.com.
In the last 10 to 15 years being in ministry, being married, something that has been constant in our lives is Samaritan Ministries. As we've moved, we've had babies, we've had different things come up, we have just been able to rely on Samaritan in ways that we never really even thought about before becoming members.
Our heart's desire is to plant roots and be in a place for a really long time. It's how we were raised. We see the benefits of that, but we also see the open-handedness of being used by the Lord wherever He calls, because we just assumed when we started pursuing church planting, the quickest way to get from point A to point B is a straight line. And with the Lord, sometimes you find out it looks a lot more like this. And yet, Samaritan was with us through the entire thing.
We didn't have to look into, we have to change insurances now because we've moved states or whatever the case may be. And it's just been a real blessing to us in different phases of life.
I'm Kyle.
I'm Colleen.
We're the Gen X.
And we're Samaritan members.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Folks, we appreciate you all. We also appreciate our faithful sponsors coming alongside us to support us. We got two of them today. Samaritan Ministries is one of them, and Crossroads Kids Club is the other one. And we're so grateful for them, Mark. If you're looking for Book of Acts, healthcare sharing, that's a great place to go, Samaritan. And if you're looking to change the world one child at a time by sharing the gospel in public schools, Crossroads Kids Club. SamaritanMinistries.org and Crossroads can be found at reachOurSchools.com. Mark, what do you say we get to some more questions here? I know we got a lot lined up on Question Friday.
Let's do that.
This one comes from Paul, Mark. So interesting question. He gives a lot of background about whether they're going to build or buy a new house, purchase a rental property. They're getting into some real estate investing. And here's Paul's main question. Should we continue to wait until prices right-size themselves, this is home prices, before doing anything in the residential real estate market? I just don't see how prices have continued to remain at the current levels. Other than that, it's institutional investors driving up prices of single-family homes. Mark, what do you think?
Interesting question. Wow. So the question boils down to, should they wait before they start investing in real estate? Is that what it is?
I think so. Yeah. It sounds like Paul doesn't want to buy in right now.
Is it the right time?
Yeah. Understanding prices. He's wondering if prices might go lower, I guess.
Yeah, there's a chance they could. We've been watching the builders. We've been listening to Trump. We've been listening to the administration. Looks like there's some incentives going out there to start building supply. I've read a couple of articles as doing research on some of the builders that they are starting to wake up to the idea that just because they can make more money building $500,000 and $1 million houses, that there is a serious need for smaller starter homes to come onto the market, so that the young ones can find a house as well and don't have to start off like you and me. We probably, many of us, our first home was not a 5-bedroom, 6-bathroom, 4-car garage with a swimming pool and all that. My first house was nothing like that. It was
Mark,
a starter house.
That's so funny because mine is. No, I'm just kidding. Mine's a 2-bedroom. Mine's nothing like that either. That's right. I've got 3 kids. We're crammed in it. Yeah, absolutely.
So could the prices come down? I think there's a possibility with, but there's so many levers being pulled. First of all, interest rates have come down, and they're coming down a little bit. I think they're more normal than most people want to realize, the interest rates for mortgages. Most of my younger life, the first half of my life, interest rates were 8% or higher. So, being below 8% to me is nice. Yeah, when they got down to 2.5%, 3%, that was nice too. But we won't always see it there because it affects the markets and people buying our treasuries and supporting our government's addiction to debt and things like that, keeping it so low. So I don't know. I can't predict the future. My saying is always, I don't predict the future, but I think there's a possibility that we're seeing the builders ramping up to build some more entry level and increase the supply, so the supply and demand isn't so bad. We had an article last week where people are removing their houses from listing because they didn't sell because they priced them so high. So they're pulling them off so they can get past whatever time period it is before it shows they were already listed and nobody bought, so they can relist them at maybe a more reasonable price, and people won't lowball them because they think they're trying to get rid of a house and can't. So there's the possibilities, but I don't know. It's very hard to say. There's also other options. You could build your own houses because the price of buildings come down, supplies, transportation, all of that. You could find fixer-uppers, which everybody is doing, and that's part of the reasons why prices are being bid up on that. I'm just going to get to the point. If it was my decision, if I was going into real estate, right? If I wanted to get into real estate, I think I'd wait. Unless the build cost basis stays far below the market, unless, I don't know, unless the interest rates got so low, it made it sense to carry a short-term or carry a loan against, and I could still use the real estate for rental if that was what I was going to do, or carry the loan for a short time without major impact if I was flipping it. So, building may work if costs stay low. Buying now, risky, maybe poorly priced at this point. I agree with you on that. I think just be patient at this point, unless there's a rush. If you have a rush and you decided to do it, well then, be the savvy investor. Go out and find the right product. It's going to be harder. You're going to have to work harder. But maybe if this is what the Lord wants you to do, He'll bring you to the right houses. But I would wait personally.
That's good stuff. Yeah, Mark, I think just some good general insight for Paul and anyone who's wondering. Some people are cut out to be real estate investors, but not everyone is. I think that's important.
Yeah, and I'm not sure of what kind of real estate investor. Is he going to lease? Is he going to flip? Is he going to, what's the idea of it? So
yeah. Well said. Well, Mark, here's a question from Karen, 60 years old. Karen is asking, Mark, I know that if we own a stock, it's okay to add to it, even if it's not necessarily on the buy list. But is that the same for preferreds? So she says, we own Greenback preferred. That's a GRBK, Mark. But it's only 1.2% of our portfolio, and we're underweighted in preferreds. So I'd like to bring this up to about 3%. Is buying this a good move, even though right now it's a hold and not a buy? Is 3% still the target for diversification, even for preferreds, or is this going to a higher percentage for preferreds? Okay. What do you think?
That's a good question, and there's a lot of questions in there.
Yeah.
Let's talk about hold position first. The reason we take something from a buy to a hold could be multiple reasons. One reason could be it has just peaked out in value, and we're concerned that that value is going to take the stock a while to catch up to the earnings and the profits. It's going to take it a while. Revenues and earnings are going to take a while to catch up to that valuation. So there might be a real slowdown, or it could be because the projections on this company's earnings going forward are projected to go down, and as such, people start backing off of that issue, and maybe the price could come down. Preferreds are a little more stable than the common stocks on those, so it's not as bad. There's a reason it's on a hold. I'm not saying you can't go in and use a hold position and boost it a little more, but be very careful about that. There could be some reason. It could be on a hold because maybe the management did some stupid things and borrowed a gob of money, and now their cash runway is very short, or their coverage isn't as well, and we're waiting for them to get that under control before we put it back on a hold because of the risk of that stock going into default or something like that happening. There's a lot of reasons why it would go on hold instead of a buy. The main reason we put it there is we don't want new investors coming in and saying, oh, this is on a buy, I think I'll buy it, and then they have to wait 3 years before it moves or before it does what it needs to do. Now, realizing preferreds are more of an income vehicle than a growth vehicle, it usually leans towards there's some structural or fundamental issues we're looking at and waiting for the management of the company to just get those straightened out. I'm not saying there's a big issue with any of them. If there was a big issue, we would put it on a sell. But there are some things that we think that, this wouldn't be a great one to start buying into today. Maybe in a month or a half a year, we'll put it back on the buy list when those things get straightened out. That's the reason for the hold. Now, added modestly to your existing preferred, I think that maybe a better strategy might be go out to the buy list, sort by preferreds. And, there's 5, 6 preferreds out there. If you only have one in your portfolio, now diversify, go into several and not just one. And maybe you've already done that. Maybe you already have all the preferreds that we have on our buy list, and even more that you found that you like. But if you haven't, go to the buy list. And finally, the 3%. We usually say with normal stocks, depending on the type of model you're in and your sleep factor, meaning your risk, your ability to sleep well at night, no matter what the risk is. 1 to 3%. That's kind of an entry level for it. It's not a strict rule. It's a guideline. We're here to help guide you in your managing your portfolio. So I would say that if you're at 1.2% in a stock, that's not a bad thing. You could get a little more diversification by going to the buy list and finding something else. If, on the other hand, you're going into a new thing and you're comfortable with 3%, that's okay too. So it's guidelines, 1 to 3%, depending on your risk tolerance or sleep factor, as I like to call it, and the portfolio you are in. If you're in an income portfolio or growth in income portfolio, anything that trades on the market, I would bring it down a little bit, maybe 1 to 2%. Anything in a growth portfolio, I lean on the upper end of that because you want to grow it, you want enough in it so that you could grow it. I think I touched on all the questions there, didn't I, Seth?
Mark, I think you did. It's a great question, Karen, and we appreciate it a lot.
Yeah, I hope that does help you, and I love your heart on that.
Yeah.
And I love the heart of all our listeners and our partners. And I hope that you will continue to love the Lord so much that you will not compromise your stewardship, no matter how much they offer you or what benefits they offer you, that you'll stay true to funding the light and defunding the darkness and investing with biblical integrity. God bless everyone. Look forward to seeing you Monday.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.